Hi folks, greetings to everyone tuning in today. Now, when it comes to trading, what's the real deal? Is it all about picking the right strategy, analyzing markets and indicators, or getting those secret tips from trading gurus? Well, I've got my own take on that, and it's a bit different from the usual stuff. Curious? Stick around until the end of this video. Let's start. Alright, let's jump into trading. I'm opening a short position here. I've got a hunch that the exchange rate of the British pound and the Aussie dollar is about to take a dive. The price has climbed to a resistance level and the chart is coiling around it like a snake on a branch for the past hour. I'm expecting a bounce off this level where the upper boundary of the Keltner channel is also hanging out. Maybe after the bounce the price will head higher. If the D marker sneaks into overbought territory, that could be a solid sign of a breakthrough. But for now, I don't think the buyers have enough muscle. Now, my friends, let's talk about emotions in trading. Sometimes they're positive, but occasionally it's a bit of a downer when trades end in the red. In my regular trading, it's like 20 to 25% of the time. But this trade isn't part of that statistic. First profit is in the books. I'm going all in and let's scout for a new entry point. Hey folks, so one of the most common questions from newbies is how do you figure out the right moment to enter a trade and the expiration time? Seems simple, right? Find the system, analyze charts and indicator signals, but there are always 100 questions that follow. How to take those first steps, where to get knowledge without draining your wallet. Just join my Telegram channel. The link is in the description below. Subscribe and get ready-made solutions. Every week we run a marathon where we, along with other partners, boost our deposits. It's easy. You've got $100 and 5 days. At the end, your deposit grows all the way up to $5,000. I share daily trade signals and explain them, and you follow along. Thousands have joined and shared their feedback also in my channel, so participation details are in there too, and you should definitely check it out. Just subscribe, shoot me a message if you have questions, and also I will hook you up with a link to register on Pocket Option, which will give you 50% deposit bonus for free on your first deposit. So I'll see you in my channel, and for now, let's get back to trading. So opening another trade, betting on the exchange rate going down. Pay attention to the chart, let's figure out the reasons. So no point reacting to the MACD lines crossing in this situation since the columns show low volatility and no clear divergence. Let's draw lines through the recent candle highs and lows. See that the price is moving in this corridor, bouncing off the upper and lower boundaries. The price is currently at the top boundary, the ceiling, if you will. So the only way, in my opinion, is down, following the laws of market and gravity. And plus, the D marker is heading down towards oversold territory, indirectly confirming my hypothesis. Let's keep an eye on it. Hey friends, also, if you've ever dabbled in real money trading, you know the wild emotional roller coaster that comes with it, right? Right now it's all good vibes, $41 in the balance, reinvesting that and keeping the party rolling. But let's be real, these emotions can lead to mistakes. Sometimes they even take us on a joyride straight to the depths of depression. It's a vicious cycle. A slump breeds negativity and that leads to fresh blunders. Okay, back to trading. I think it's a good moment to open another option, betting on the rate going down. The chart dipped and hit a support level, but the price was quickly snatched up by the players. And on the rebound or correction in this case, I'm trading downward because in my eyes, the support level is the true target for the rate at the moment. Indicators back up my hypothesis and align with each other. MACD lines crossed and the marker is entering oversold territory. Okay, let's keep the conversation going. So the arch enemies here are fear and greed. as written in many trading psychology textbooks. But today's video is all about emotional fatigue and being a bit off kilter. I'll share how I fought it and the reasons behind its appearance. But for now, back to trading. So a trade is closing and the balance is growing to $77. Things are looking good, but it's time to hunt for a new opportunity. So back to the British pound and Aussie dollar pair. Its value went up, but the rise is smooth with frequent corrections. And like last time, I'm trading from the resistance level, which is right here. The chart broke through it now, but I'm confident in a downturn. MACD shows low volatility and D-marker signals overbought. In this situation, quotes have little chance of immediately breaking through levels. Also, if we draw lines through candle highs and lows, we'll see a channel. Within this channel, the price goes up with constant rebounds from the boundaries. The lower boundary, by the way, aligns with the middle line of the Keltner channel, often serving as support in an upward trend. So I'm expecting a similar oscillating movement. It's almost a textbook example of how prices rise on low volatility, gathering strength at each step. There you go, the forecast is on point. Let's move on. So I'm opening a trade on the downside, folks. And let me break it down. We see a prolonged smooth uptrend just like in the previous trade. Alright? There has already been a rebound from the resistance level. And furthermore, MACD shows a clear line crossover. The green one is dipping below the red. And D-marker has been hanging out in overbought territory for too long with low volatility. So I expect it to drop below the 70 mark now. So I'm expecting a drop to the middle line of the Keltner channel, just like it happened before with chart corrections. If we look at the growth trend, it's evident that there is a pattern of jumps up and back to the middle line of the Keltner channel. Maybe even a complete reversal. But both scenarios can bring us profit. Let's see. The trade is close to closing. And there you have it. $232 in the balance, and friends, sometimes the market gives us a chance to cash in multiple times on one prediction. Now is one of those times. Trading down again because the set target hasn't been reached yet. No signs of a different market scenario. If anything, D-marker is getting close to exiting overbought territory, so indicators are even more in favor of my decision. Okay, back to our chat. The main cause of emotional fatigue is the constant monitoring of the charts. Sounds illogical, but trust me, constantly watching charts is genuinely draining. Those who've been trading for a while will not disagree with me. It all boils down to one thing. People just like watching charts. Even if you're trading on a higher time frame, like an hour or more, there's this itch to peek at the chart and see the price action, even if the trade was based on a solid forecast and analysis. Just like I'm doing now. The target is spot on, $316 in the bank. Let's observe. The thing is, sight is one of the most important human senses, right? We're used to getting pleasure from movies and entertainment programs. We need visual entertainment on a regular basis. And in trading, there's an added monetary value to that. Okay, I'm opening an upward trade. As I mentioned earlier, the chart movement is quite predictable. It constantly rebounds and grows from the middle line of the Keltner channel. And yes, there's a MACD line crossover and a reversal is possible, but not on the first attempt. I'm waiting for either a bounce and reversal or further growth. Again, both scenarios suit me, but for now, let's keep talking. So I've often noticed that I get a kick not so much from potential profit, but from watching the price changes during an open trade. When you're not in the market, let's face it, watching the chart can be pretty dull, right? But when you open a trade, enthusiasm kicks in and the price goes up, goes down, goes the other way, goes the right way. Just like this time, there's profit. Right now, it's a bit tricky for me to predict how the chart will behave next, so I'll scout for a new opportunity. So back to the euro and dollar pair, I'm opening a downward option. Common sense tells me that with low volatility, the resistance level won't likely be broken. And it's pretty strong in this trading session, as you can see. The long green candle pushed the chart to the level, so it's logical to assume that at the very least, it's a correction. The marker is still in the overbought territory, but according to MACD, we see red histogram bars and very low player activity during the rise. In low volatility, entering overbought territory is better seen as the end of the growth phase. In such a situation, the marker tends to exit overbought territory at the nearest level, which is what we're witnessing now. Excellent forecast and result on the ballots. Let's continue the conversation and work with this pair. Friends, constant chart monitoring often turns into a strong addiction, alright? And continuously observing profits or losses leads to a roller coaster of emotions from euphoria to downfalls. The market is given a second chance, I see, and I won't miss this opportunity. The price was sharply brought up and it rose again to the resistance level. But fundamentally, nothing has changed pretty much. I predict a drop for the same reasons and scenario. And emotional swings are exhausting. This psychological fatigue is the reason for inaccurate analysis, knowingly losing trades, untimely open positions, and so on. You become worn out, start making regular mistakes that negatively impact your balance. You see entry signals where there are none, and things start to seem to you. You close trades too early, or on the contrary, let them run into significant losses. And all of this is the most common mistakes that emotional instability brings. So the trade is nearing closure. Another perfect forecast, like clockwork. If someone tells you that you can't step into the same river twice, show them this video. But for now, let's observe this pair. I think there's still earning potential here. Now let's open another downward trade on the same pullback. Similar scenario here, the chart crossed the middle line of the Keltner channel, which is a significant level, and the price rose during the correction moment. Now, but the marker continues to decline and has already left the overbought zone. Also, according to MACD, we see a series of red histogram bars. Therefore, all the prerequisites for further decline are evident. So the price can easily come down to the lower border of the Keltner channel, and further movement will depend on the situation, but we need to make a forecast for just 1 minute. I've already covered videos on various aspects of trading psychology, and I strongly recommend watching them if you plan to seriously earn in this field. Some people ask me how much can be said about psychology, but I believe it's the most crucial aspect. Strategies, analysis, they're important too, but you can't fully apply them without the right mindset. So the trade is closing. Let's move on, friends. So let's open a downward trade. Pay attention to the chart. I'll explain the reason for my decision. In this case, it's more correct to consider not the signals of indicators, but rather a sideways movement in a very narrow price range. Let me outline its boundaries to make it clearer for you. I'm opening a trade from the upper boundary, expecting the price to reach at least the lower boundary. In such a narrow range, relying on indicators is challenging, but even without them, you can earn well, with understanding the principle of how the market works. So let's continue our conversation. Today, I want to share with you 2 ways to deal with emotional instability. I use them regularly, and from personal experience, I can say they work like a charm. They're as simple as crowbar but work flawlessly. Anyone can apply them, regardless of whether you're a pro or a novice. But more on that later. For now, the trade is closed. Let's lock in the profit and observe this pair. So I opened up an upward trade this time. And why do I think so? Let's look at the chart and analyze market signals, alright? There was a full-fledged intersection of MACD lines, and based on the sharp fluctuations in the candle bodies, one can conclude an increase in market volatility. Therefore, I draw the conclusion that the resistance level will be taken, and I expect the price to rise. At a minimum, it could reach the upper boundary of the Keltner channel, or maybe even higher. Let's observe. But for now, let's go back to ways to combat emotional fatigue. The first is to set specific goals for the next day. For example, set a goal to earn $100. When you achieve it, close the terminal immediately and forget about work and charts until next day, alright? This practice will limit you from constantly monitoring charts and, consequently, will help prevent future emotional stability. So the trade is closed. There is a result, but it was a subdued movement. I still believe in growth, but for now I want to observe the price chart. So I'm opening another upward trade. As we can see, the price has risen to the upper boundary of the Keltner channel. My previous forecast was correct. So a phase of rising growth begins. The new goal is the next resistance level. It is quite far away, so there is room for the price to rise. And let's return to our conversation. The second effective method is to reduce the size of the trades you open. Not everyone understands this approach because with reduced investments, potential profit will also decrease significantly. We know that. However, it works the other way around. You will simply worry less about potential losses, and therefore you won't get stuck in the trading room as often, watching the ups and downs of prices that cause you stress. These two simple rules will help you maintain psychological stability and capital. And our capital on the balance has grown to $5,200. We have achieved a good goal today. It's time for me to take a break to clear my mind, and let's conclude this trading session. Alright friends, those who come out on top in trading are those who endure the rally over the long haul. To achieve this, it is crucial to keep a clear head and combat emotional swings. I share with you some very simple principles that will allow you to do just that. Start applying them today. I'll be grateful for your likes and comments. Also, please don't forget to subscribe to my channel and hit the notification bell icon to not miss out on any new episodes of mine. And thanks for having me today. I wish you a great day. For now, I bid you farewell and bye-bye guys.